Welcome to the Deep Dive. Today we're digging into the Q3 2025 results for Monster Beverage Corporation, ticker MNST.
Yeah, this call was interesting, a real head-scratcher in some ways.
Exactly. So our goal today is to kind of unpack this paradox. Management delivered, a really strong quarter operationally.
Crushed it. Record margins, beat consensus estimates pretty significantly.
But then you look at the tape, the stock actually slipped, about 2.2% in after hours?
It did. Which raises the big question for you, the listener. Does this operational strength actually matter if the market already expected, or maybe even over-expected, this kind of performance?
Right. Is the execution enough, given where the stock trades?
So let's kick off with those headline numbers, because honestly, they were outstanding. Net revenue came in at $2.2 billion.
Which, blew past the $2.1 million consensus. That's like almost $90 million better.
And it's solid growth, too, 16.8% year over year. Very healthy.
And the bottom line kept pace. Non-GAAP EPS was $0.56.
Beating the street by a good 8 cents there. Consensus was $0.48.
But the number that really jumped out at me, confirming that operational story, was operating income.
Oh, yeah. Surged 40.7% year over year. That's huge. Landed at $675.4 million.
Which pushed their operating margin way up, right? Over 30%.
30.7% to be exact. So financially, you look at it and it's almost flawless. A really clean beat.
Okay, but then back to the market reaction. It was negative initially, at least.
Right. And the volume tells a story, too. Spiked almost 98% compared to the 50-day average.
So that suggests maybe crowded positioning? Or just that these great numbers weren't, great enough?
Could be. Or maybe the market just needed more, like explicit guidance, which we didn't really get.
Let's hold that thought on guidance. First, let's unpack where that financial strength, especially the margin improvement, came from.
Yeah.
That feels like the core positive here.
Absolutely. Gross margin expansion was the star, up 250 basis points year over year, hitting 55.7%.
That's a big move, especially given, the cost environment everyone's dealing with.
It is. And management broke it down into 3 main drivers. First, those pricing actions they took earlier are sticking.
Okay, so pricing power. What else?
Second, continued supply chain optimization. They've been working hard on that. And third, a favorable product mix.
Meaning more sales of the higher margin stuff.
Exactly. They specifically called out the shift towards zero sugar options, things like the Ultra family, which are helping margins.
But it wasn't all smooth sailing on costs, was it?
No, definitely not. They flagged higher promotional allowances, which offset some gains. And aluminum costs are still a pain.
Right. The Midwest premium tariffs, that stuff hasn't gone away.
No. And that Midwest premium, just to clarify for listeners, isn't just the raw aluminum cost. It includes things like refining, shipping it domestically. It adds up.
So managing a 250 basis point increase while fighting that kind of input inflation, that shows some serious discipline.
Exceptional discipline, I'd say. Really strong cost management on display.
And that strength isn't just domestic. The international side looks like it's really firing on all cylinders now. That's the second big pillar.
Yeah, international growth was impressive. Sales up 23.3% year over year, hit $937.1 million.
Wow. And the scale there is really shifting the balance of the company.
Totally. International is now, get this, a record 43% of total net sales. Almost half the business.
Is the growth concentrated anywhere, or is it pretty broad?
Seems pretty broad. Looking currency neutral, APAC grew 20.0%, and EMEA, Europe, Middle East, Africa grew 23.0%. Strong across the board.
Was FX a big help, or?
A little bit. They got a favorable tailwind of about $31.8 million from currency. But, the bulk of that growth is organic. It's real demand.
It reflects that distribution strategy working, especially leveraging the Coke system overseas.
Seems like it. Now let's quickly touch on the segments. Core Monster energy drinks grew strongly, up 17.7%.
Okay. And strategic brands?
Also solid, up 15.9%. So the foundation, the core business, is clearly very healthy and profitable.
Which brings us to the elephant in the room, operationally speaking, the alcohol brand segment.
Right. Yeah, that continues to be, a problem. Declined 17.0% year over year, only $33.0 million in sales.
Ouch. Are they sticking with it?
Management says yes. They talked about new hard lemonade lines, Blind Lemon and Blinder Lemon, shipping nationally back in July. But look, the numbers just aren't there.
It's clearly a drag on resources and results right now. Kind of the one dark spot on an otherwise stellar quarter.
Absolutely. It stands out.
Okay, one last point on the quarter itself. Share buybacks.
None happened in Q3. They still have about $500 million left on the authorization, but they didn't use it during the quarter.
Interesting timing, maybe. Not to buy back shares when the stock dipped a bit, but let's move on.
Yeah.
Management clearly wanted to shift focus forward, right? Towards strategy and innovation.
Definitely. The call had a very forward-looking tone. They spent a lot of time on the pipeline.
And reiterating the strength of the core, especially Ultra.
Yeah, the Zero Sugar Ultra platform is the engine. They said the family grew 29% year over year in the US. That's huge, boosted by the main White Zero Ultra, but also newer flavors like Ultra Vice Guava getting good traction.
So, okay, they've fixed margins, international is humming. Question becomes, what's next? Where does the next leg of growth come from?
Exactly. And management's answer seems to be innovation, pouring some of that margin power back into new products, new demographics.
Which brings us to the 2026 pipeline. This felt like the main event of the call, strategically.
It really did. They detailed a pretty robust launch plan, clearly aimed at the wellness energy space where competitors have been making noise.
The big reveal was FLRT.
Yep, FLRT. Explicitly female-focused, 4 zero sugar flavors planned for a late Q1 2026 launch.
Flavors like strawberry fling, guava lava. Sounds quite different for Monster.
It is. This is them directly targeting that wellness-leaning consumer, maybe someone who drinks Celsius or similar functional beverages now, trying to broaden that base significantly.
And FLRT isn't the only play there.
No, they also flagged Storm Energy, planned for Q2 2026, also targeting that same wellness zero sugar segment.
Plus other things.
Yeah, the national rollout of the Lando Norris zero sugar drink, and even some limited time offers, LTOs, planned for the summer of 2026 around the U.S. 250th anniversary.
So they're definitely not resting on their laurels. They're spending to grow.
Absolutely. And underpinning this is pricing. They confirmed new price adjustments effective November 1st.
Either street price hikes or cutting back on promotions.
Both. They basically signaled they're prioritizing rate growth, making more per can over just pure unit growth right now.
Which implies they think demand is pretty inelastic.
Seems so. They said they expect minimal impact on volume. They feel the category still offers good value compared to, say, coffee shop drinks. They believe they have that pricing power.
Okay, so strong quarter. Focus on innovation and pricing. Which brings us back to that initial puzzle. Why the dip after hours?
The most likely culprit, I think, is the guidance vacuum.
No hard numbers for Q4 or 2026.
Exactly. Management just reiterated confidence, talked up demand, highlighted the innovation. But for a premium multiple stock like Monster, the market often wants explicit, quantifiable targets. Confidence isn't always enough.
And you have to put this in the context of the broader market too, right?
Definitely. Energy drinks are hot, yes. But the overall staple sector, think XLP, has been lagging the S&P 500, the SPY, pretty badly.
So maybe some sector rotation or just general caution about consumer staples?
Could be part of it. Without specific company guidance, the stock might just trade more with those broader, sometimes negative sector trends.
Although looking back, Monster has massively outperformed.
Oh, absolutely. Over the past year, MNST was up, 22.5%, compared to SPY up about 12%, and XLP actually down 6.5%.
So the company has executed incredibly well. Historically, management has earned some credibility, you'd think.
They have. There's a strong foundation. But high expectations come with that territory. If you don't spoon feed the market numbers, sometimes it gets nervous.
So looking ahead, what are the key things investors should be watching?
Well, near term, holiday season sell-through data will be important. Then, obviously, the Q4 results call early next year.
And on that call, everyone will be listening for more detail on 2026, right? Especially how FLRT is actually landing.
Exactly. Any early traction data, specific distribution plans, marketing spend for FLRT and Storm, plus ongoing updates on costs aluminum again and how the promotional environment shakes out.
Okay, makes sense. Which leads us nicely into our next segment,
where we step away from just analyzing the past quarter and think about what could happen.
This is not financial advice.
Okay. So let's accept the premise. Margins are fixed. International is growing strong. Those problems are kind of solved. The next big catalyst has to be innovation, right?
Seems to be management's bet.
And the market, by selling off slightly on great results but no guidance, maybe showed its cards. It can't quite price in that innovation success yet. It's uncertain.
Which potentially creates an opportunity if you believe in the pipeline.
Potentially. So the outrageous but plausible trade idea here is a direct bet on that innovation pipeline, specifically the wellness stuff, hitting big.
How would you structure that?
Think long Q2 2026 call spreads. Basically, you're betting the stock will be meaningfully higher by the middle of 2026.
Why Q2 2026?
Because that's when both FLRT, launched late Q1, and Storm Energy, launching Q2, should be in the market and hopefully showing some real traction in the sales data.
So the thesis is market skepticism right now creates a lid on the stock because of the guidance vacuum.
Right. But if FLRT and Storm do successfully capture that new demographic, the female wellness consumer, et cetera, in the first half of 2026.
Then the narrative shifts.
Exactly. It delivers a portfolio re-rating. The market suddenly sees proof of concept for demographic expansion, blows past the current skepticism, and reprices the stock higher, rewarding that innovation success. The lack of guidance discount evaporates.
It's a bet on execution of the new strategy, essentially.
A high conviction bet, yes. That these new products aren't just line extensions, but truly transformative in broadening Monster's reach.
Okay, so wrapping this all up, the core takeaway from Q3 seems clear.
Yeah. Operationally, they nailed it. Record margins, great international growth. They proved they can manage costs and drive the core business.
But the market's focus has shifted. It's now demanding proof that the next phase, this big innovation push, will actually work. They want forward visibility.
Which leaves us with the final thought for you, the listener. That 40% jump in operating income. Impressive, yes, but maybe not the most important number from this quarter, looking forward.
What is that?
How quickly and successfully that unproven innovation pipeline, especially FLRT, starts converting new types of consumers. Is management making the right strategic gamble here to secure future growth?
Or is withholding guidance a quiet signal that maybe even they aren't totally sure how 2026 will play out yet? Is that visibility genuinely murky?
That's the key question. Answering that will likely determine if Monster continues to trade like a premium growth stock or settles into more of a staples-like multiple next year.
Lots to think about. Thanks for joining us for this deep dive.